Hey everybody, Jared Jones. This is your monthly update on the top housing markets in Florida, and I cannot believe that I am breaking this story first. Not seeing this anywhere on the internet. 3 out of 4 marketplaces, the top markets in Florida, are now down in price over prior year. First time this kind of data has been published anywhere in 6 to 7 years, folks. Gotta tell you, this is a game changer because all across the markets throughout the US, you're seeing corrections take place. Florida has been untouchable, and everybody's been on the sidelines taking a look at how this Florida market's moving, how unaffordable it is, how tough it is to buy here, just saying, hey, is this thing ever gonna change stride? Here's the news. Redfin data now shows multiple metro areas are break even, most likely going to dive even lower in the summer. I'm going to make predictions here as I cover the top metro markets. This is the monthly update where I cover Jacksonville, Tampa, Orlando, Miami, the top markets in Florida. This is the #1 update of its kind on the internet. I'm going to jump through, show you where all the weaknesses are. If you own in these markets, you're going to know where the trouble spots are in your home market. If you're looking to buy in these markets, you're going to know exactly what's going on. You're going to know better than most real estate brokers even know as we dive through the data. But another top story that you're gonna see happening, Florida Atlantic University School of Business, the PhDs and the quants that work in that system have been running a data set of the 100 most overpriced marketplaces throughout the country, and their most recent data coming into the new year positions 5 Florida markets in the top 10 of the 100 list. So you're talking top 5% of the marketplaces supposedly are in the Florida market. We're going to cover exactly what that data means because these data quants have been running and tracking history saying that these marketplaces are poised for 30 to 50% correction. Most of them are on the 40% mark. We're going to dive in just exactly what that means. We've got bills going through the state house in Florida, possibly preventing Chinese nationals, or particularly those from the Communist Republic of China, from buying homes in the state of Florida. Obviously, that's raising eyebrows. We're going to talk briefly on what that is. If you appreciate these Florida deep dives and going through the data, helping you understand what is going on, before I cut into the data, I want to call your attention to 2 videos that if you haven't missed them, you got to see them. Florida's insurance crisis is a huge problem for Florida real estate owners. If you own here now or you're looking to buy, Ron DeSantis came out and said that the last insurer of choice for Florida is practically insolvent, folks. And in recent weeks, I covered the top 5 oceanfront markets in Florida that are poised for price crash. If you're looking to buy an oceanfront city, check that update out. Smash the like button, subscribe to the channel for the best issues that are happening in Florida. But now let's get into this week's topic.
Look at this, folks. This is not good. Look at the natural price trend in this market. This market, year after year, consistently lifts into summer. It has peak activity and prices do great. This, folks, is not a good trajectory. This isn't even a sideways slide. This is a down. Everybody, let's get started on the interest rates first because we are an interest rate dependent economy. I'm going to prove that out to you right now. If you were watching the media in the last 4 months on the marketplace, you saw some of my most recent updates. You'll notice that when we came through, December activity was terrible. It's usually never busy around Christmas. But then right as we came into the new year, January, we had record low sales because nobody contracted anything through the Christmas season, which isn't wildly uncommon, but it was way low this year. It was off the table, dead. Realtors quit the business. Mortgage lenders quit the business. There's no money to go around. Real estate layoffs ensue. Now look what happens. As we go into January, this is this graph you see. See this stretch right here where it gets a little low? So December it falls down. January it's low. Boom, it jumps in February. But look at this. January, the interest rates fall to 6% on a 30-year fixed. When it happens that we go and slide from 7 down to 6, January buying, even though there was no home selling, close in the end of January, people were in the market looking to buy, putting homes under contract, which as you know takes 30 days. Those homes are closing in February. So February goes on fire because all these low interest rates. But look what happens in February, folks. You see that? That is your blood pressure. It's going up. The patient's heart is screwed. What happens is we got cost for housing going through the roof in February. We had banks collapsing, all this kind of stuff going on. And as a result, we had sales hit the brakes again. Why did they hit the brakes in the spring, coming in the spring? They shouldn't be. It should start to be building up and getting busier. But as we came into these high interest rates in February, March, actual closings last month fell off a cliff again. So it went dead in January, busy in February because January rates were low, February rates go up, March sales go down, meaning the closings that happened in the aftermath of those high February interest rates, it hits the wall, there's not a good amount of closings. Let's make some predictions, folks. Here is the current situation we find ourselves. Right now, interest rates for 30-year fixed for decent credit, let me go up, is 30-year 6.66%. So we're knocking on the door of 7% again. 30-year for an FHA is at 6.25%. That's not good, folks. I should say FHA fell early part of this year, and even last month we had buyers rate locking at 5.75%, which isn't too bad. But these high rates are driving a slowdown. It is a interest rate dependent economy, folks. When the rates go up, buyers hit the road. They stop buying and the marketplace slows down dramatically. Let me pull up another top story I want to cover with you. These are the 10 most overpriced housing markets in the US. 5 are in Florida. Now this caught my eye because I said, you know what is the market data that they're pulling from? And I found out that they're pulling the 100 overpriced index that Florida Atlantic University School of Business maintains. They go down the list and they pull up Nashville, Tennessee is overpriced. It should be expected at $296 and they're actually at $420. So they have a difference of a 42% housing correction. Number 9, Tampa, Florida, which is one of the marketplaces we're going to go and do a deep dive. And they're expecting a 43% correction in Tampa. They're expecting a 44% correction in Deltona. I'm not going to cover Deltona today, but I can tell you folks, Deltona has in no way or shape or form started to hit the brakes on the prices yet. Okay, so none of that started. Detroit, no surprise. Palm Bay, Florida. I have not looked closely at Palm Bay. Palm Bay is right around Melbourne. It's the coastline, East Coast, Atlantic. Atlantic's been holding strong, folks. Atlantic coastline, great. I would say there's more argument for the Gulf side, the left-hand side of the state, to see more trouble, but not on the east yet. Lakeland, Florida, definitely find no disagreement. If you guys are watching, there's a update that I do on a practically monthly basis now called the 5 markets I expect to start to see correction. Lakeland, Florida has made the list, okay? And that's based on data, not, you know, the quants that are producing this particular report are basically just pulling history and saying, well, prices rose really fast. They draw a straight line across the graph, and then they wonder what's going to happen in the end. Let me show you. This is actually how they do it. So they pull the average price, and then they do some kind of Zillow index on top of it. So you can see they just put a bar graph of, let's just call it what we think price should do in a normal market that's not dealing with inflated currencies and currency manipulation, because that's real life. And so this doesn't actually have a normal market pace. And who knows? I mean, maybe we didn't have currency manipulation. Maybe real estate would just be like a flat line. It never did anything. But because it gets inflated, we change the rules. We create loosey-goosey lending in 2008, and all of a sudden it creates inflation. We create easy money, and it creates inflation. Doesn't matter the reason, but what we do know is this is the standard line that this company has created, and here's the graph. In Orlando, they're saying that as of 3/21 or 3/31/23, Orlando Metro should be at its expected price of $272. It's at a 40% premium for trade. For the sake of being thorough, let me show you the other markets. Jacksonville, Florida, it is $353,000, should be trading at $249. Also at a 42% premium right now. We'll hit Tampa. Tampa is at $363,000. It is trading at a 45% premium, folks, and is at the top of the naughty list for price. And the most suspect of the group that I think in this data, this is kind of, you know, when you see data and it doesn't actually show reality, Miami's on fire and it still hasn't let up, and all these other markets as of March 31, 23, there's been correction in these marketplaces. So how come Miami is only at 39% premium? Doesn't make sense to me, folks. If you look at the data, I think Miami is higher up the list. There you go. Florida Atlantic University, College of Business, PhDs in quants, folks, tracking this data for us. All right, folks, let's get to the superstars of this particular update. Tampa, Florida. We're going to go Tampa, Jax, down to Orlando, down to Miami. Going to channel mark these, so if you just want to jump to specific metro areas, you can. You want to listen straight through. You're going to hear a lot of information. You're going to know a lot about the market when this is all done. Take a look at this. You can see that the natural trend of Tampa is it fires up vertical and then goes kind of straight across and then comes down. It doesn't have that like U shape. It goes straight up in the air. And then it's almost like people come out of Christmas and all of a sudden, bam, they dump their house on the market. You can see it's a multi-year low. You can see Tampa slid sideways for like 60 days. And honestly, it really starts to take off right about this time and peak up. It's starting to pick up a little bit, but obviously new listings in Tampa are not huge. Look at this. This is cratering. So pending sales are down, and it's so weird. You can see year after year, it kind of, pendings just kind of like, they take up, they kind of pick up and hit an altitude, and then they just start to drift for a long period of time. So nothing's changing there, but the numbers are much lower. Look at the listing price median, okay? So this is what people are bringing their home to the market. They're going, I hope I get this much, I hope I get this much, and then reality sets in. Watch this. I didn't get this much. This is a big deal, folks. Check this out. Look at this. Year after year after year, Tampa has had massive liftoff. Look at this. Back in the early 2020 marketplace, $230,000. Then, boom, 2021 happens. It's going up over 280, almost to 300. Then, boom, the gap's even wider in 2022. It's 360 and chugging all the way to the peak of 393,000. And it is just, bam, hits a wall. Look at this, folks. This is not good. Look at the natural price trend in this market. This market, year after year, consistently lifts into summer. It has peak activity and prices do great. This, folks, is not a good trajectory. This isn't even a sideways slide. This is a downward slide. Tampa is 100% price correcting. And honestly, folks, if interest rates stay high, you are going to see a massive down price by mid-year. You're going to see reports, if this doesn't change, May and June, you are going to hear reports from me or from whoever you rely on your data, basically saying, look, here it is, here's the information. You're going to see 5-6% year over year price loss in Tampa by middle of this year if this trend does not change. Right now, it is dead even. It is now no longer gain. And again, this is ending April 16th. Give it a couple more weeks, folks, and you're going to have negative year over year price as the headline for the Tampa marketplace. Look at months of supply. Now, they call it months of supply, but down the graph, it actually says weeks of supply in Tampa, Florida. The peak for weeks of supply was around a 20-week supply, okay? 4 weeks a month, that's a 5-month supply of homes. Look what happened, okay? We came into the beginning of this year, interest rates slammed down, then buyers start absorbing all of that supply and bringing the pool level down, okay? So much so that it is 9 weeks of supply as of last week, and now 9.2, and it looks like it's dropping, okay? Now, this will help price, but it is interesting that while you see volume of homes dropping, the static inventory, buyer engagement coming up, the price, median sell price, is still correcting. So sellers are they're asking this crazy number when they start the list price higher, and then buyers go, come down. The sellers capitulate, and then all of a sudden you have the market where we have it. Now look at this. Average sale to list, so this is the number that sellers are having to negotiate, still pretty low. It's a multi-year low. In this marketplace, for a seller to come down on the average down to 97% is probably a big give, meaning buyers are able to negotiate more, and it's obviously far less than what you see sellers were getting over the past few years. Not a shock there. Now let's find some cracks in this economy. All right, folks, I want to show you some great buying opportunities directly in the Tampa market, okay? So one of the places that I want to start is I want to find out where inventory and growth of inventory is most prolific in the marketplace, okay? So one of the things that, as you see me panning over, I'm over St. Petersburg right now. When you see the blue areas, those are not massive jumps over prior year, okay? When you see things that are red or clear, so like see how you can see, I'm going to mouse over the area, then I'm going to move it away. But you can see right here, 33777 has a 200% inventory growth. You can see right where that zip code is on the map there. It's clear. You can see right through the map. Clear or bright red is a huge inventory jump. You've got 760 up here with 342%. Now, why is that crazy? Well, they had 11 listings last year, and they have almost 50 in the same marketplace this year. 350% growth. It looks like they're just west of the airport there. It's on St. Pete. That's a big deal, folks. Anything that's like 40, 50, 60% growth, that's not a lot of growth when you're considering that an area of your city was record low last year. It's only 50-60% ain't gonna do much. But when you start seeing these marketplaces where you're really starting to pick up, that's where you're gonna have opportunity. So right here you have 704, lot of inventory, folks, and 704. Again, it was 17 homes on the market a year ago, 72 homes there now. The north side, you got, again, 760, 774 is 250%, 773 is up there. And again, I don't get too excited on some of these markets. Some of them you'll see them at like 4%. I'm sorry, some of these you'll see at like 400%, but they only have like 20 homes on the market. That's not, even a very populous area. So let me back up. You can see a lot of these metro areas are, went from 30 homes to 58 homes. So not a huge climb there. But here you've got across the bay here, 33635s, 285%, 677s, 295%. Look at this, folks. And again, these might be less populous area. 33578 has 470%. Don't know which area of the market. This is Riverview, folks. Huge shift in Riverview. You can see up here in Sydney, 33527, 400%. Folks, these are where sellers are going to negotiate. Right here, 33572, 169 homes on the market versus 35 last year. Further south, again, these are bigger size markets. You got hundreds of houses, or 100 plus, in 33598, 449% price growth, folks. When these sellers start to go from 0 to 400%, they are going to start reducing price. Outskirts of town here, 313%, going north, 233, 33540, we have 282%. And let me go back up. I think Spring Hill is starting to see some major changes, and then I'm going to move on to Jacksonville. A lot of interesting things to talk about in that marketplace. But look up here in Spring Hill. These are pretty populous areas. 130 listings, 211 listings. Folks, that's a 212% price growth. All these areas in Spring Hill, you're going to start to see some serious price reduction. 176% here in 606. And again, coastal areas on the Gulf, a lot of them are starting to see some adjustments. One more place I want to point out, this may not have too many, that's 85 listings. Look at this, folks, 500%. 500% growth here on the north side of Tampa, Land O'Lakes area, San Antonio, all these areas. This is a lot of growth. Inventory is coming out, and sellers are either going to get with it or they're going to get crushed. Let's look at price reductions across these areas. I'm going to try and find you some opportunities where sellers are actually already getting real and cutting prices. So across the top here, look at the Spring Hill area, 33% price reduction. That means 1 out of 3 homes, folks, has a price reduction. More than 1 out of 3 in 34610. All this area, big price reduction. Sellers are just getting a rude awakening here. North side of Tampa, where they're having to really reduce prices. Again, I don't take joy in saying that. I'm just saying, and good for you, sellers. The fact remains that there's a lot of people that are trying to list their home and they don't do anything of merit to get the price adjusted to where they should. You've got Port Richey right here. This is 30%, folks. Big numbers. 29% over here on just outside of Land O'Lakes. Kind of coming down Lake Fern, 18%. Some of these areas, people are slow to adjust. We'll see some markets today. There's a particular market in my neck of the woods where there's no reason there shouldn't be more price reduction. Sometimes sellers are they put the junk out there and they think they're still in an old market. And they think, someone's going to buy my house no matter what. And they just throw the crap out there. Not going to happen. You can see down through St. Pete, folks. Look at these numbers. North side, 41%, 44%, 39% up here on the coast, Bel Air. 48%. Holy cow. 33760, folks. Go make some offers. Nearly 1 in 2 people in that marketplace, their listings have reductions. Down south, Pasadena, 38%, 45%, big numbers. Treasure Island, a lot of these are my ocean updates where you have big price drops happening, folks. Already here. Tampa is settling down. Let's look at some of these south markets. You remember, folks, some of these markets down here in the south, when I was cruising through them a second ago, you saw 500% price growth. Look at this. These markets are only like 18%. You have one here that's getting with it, 33573. They actually are at 4 out of 10 practically price reduced. But look how many people are just stagnant here. 25%. That's a big number. 1 out of 4 reducing. Riverview, 1 out of 3. 32% over in Riverview price reduction. Decent area, I think. Again, Tampa is not my mainstay, so I don't know it super well. But just interesting things. You're starting to see a lot of these areas starting to come down. 44.4%. So jockeying inventory, folks. You don't need a lot of months of supply if you go from 0 to 100 really fast. Even if it's a lower number than it's been, if all the buyers just take themselves out of the marketplace, sellers have to reduce or they're just not going to get out of these houses. All right, folks, I got some bad news if you live in Jacksonville, because I wish this were better, but I think, honestly, of the bunch, Jacksonville's got some of the most eye-opening transitions taking place. And it doesn't surprise me. I think Jacksonville, of the Orlando, Tampa, Miami combination for metro areas, I think Jacksonville probably is the default purchase for a lot of folks, okay? Meaning a lot of people selected Jacksonville because it was the most affordable metro area of all the big four in the Florida marketplace. And as a result, what goes up and goes from a small number, goes really, really hot, cause and effect, gravity kicks in, all these kinds of things. Call it what you will. But look at this particular situation we got going on now. If you look at prior year, we like to get a setting for how things work. You have this inverted U shape, which is really kind of, indicative of what we saw across the entire Redfin Metro Area system. You have inventory really, again, multi-year low on the floor, not really much going on there. Let's look at pending sales. Pending sales are a quick look at pending sales in Jacksonville. Take a look at this. On the floor, again, you really have it kind of cruising in this range year after year through the middle of summer, and pendings are just not popping. Look at the new listing median price, okay? So again, this is what sellers hit the market with, hope they get. Look at this. They rose on the year, okay? So they came into the end of last year, they were just trending down. Sellers are bringing their price down across all markets. But look what happened here. The sellers are still gapping last year by 3%, but look what happens. Last few weeks, boom, they're now cruising to actually go beneath last year. Now, here's why. I think this data point right here is getting out, folks. Jacksonville is down. It is the first official down metro. It is negative 4% to last year. Again, not to overplay or underplay that. I'm not trying to be hyperbolic, but folks, this is a data point we have not seen year over year price loss in Jacksonville for probably 6 years or more. It is a multi-year change. There's a dramatic shift in what's going on, and there's more data layers I want to show you. As we cruise further in the year, look at this. If this just kind of languishes, this gap's going to become 6 to 8%, where you're now starting to see why we saw the last graph where sellers are going, uh-oh, we need to come down because we're overlisting and things are not moving like the way that we want them to. We have to make some adjustments in the price. Look at months of supply. It peaked at 23 weeks. So now this particular market hit about 5 months, 3 weeks, almost 6 months of supply in January, and it just plummeted. And even in the face of how much inventory was scooped up, you still have some supply hitting the market. You still have some pause from buyers. And you have buyers that's negotiating better deals from sellers in Jacksonville. Look at this, folks. It's hit the floor, and in all intents and purposes, we're at a 3-month supply in Jacksonville. It's all it takes. 3 months. 3 months is arguably historically a hot marketplace, and price isn't holding here. All right, folks, let's see if we can find you some opportunities to shop in the Jacksonville area, because ultimately, if you see inventory skyrocketing, I'm going to go the north east area of the Jacksonville marketplace. You can see at the very tip there, 32034 rather is 263%. Wow, 81 homes last year is now pushing 300. You're probably going to see some major price reductions there. Across the north edge, folks, of Jacksonville, you're going to see some price correction. Pumpkin Hill Creek, what is that? Got some preserve areas out here. The area just outside northeast of Jacksonville, not too hot yet. 70% is not a huge number. But direct north, 262%, 286%, Folks, cross the west edge, boom, boom, boom. Big, big, big inventory, folks. 300, 250. These are big, big adjustments. Down south, wow. Folks, go to 32081, make some offers. 456%. Went from 20 listings to over 100 in short order. Again, Fruit Cove, nothing to write home about. By the way, Switzerland is in Jacksonville. Did you folks know that? There it is right there. 195%. Went from 65 listings last year to almost 200. And again, down south, last couple markets, 294%, 107%. Let me hit St. Augustine. I know someone's going to ask. Let me zoom in. I got you, St. Augustine. Here we go. Look at that. 325%. St. John County, folks. It's going to be some time to negotiate. Look at South Point Vedra Beach. South Ponte Vedra Beach. South Ponte Vedra Beach. And Ponte Vedra Beach, you guys are 142%. Doesn't surprise me. We're talking those East Coast markets. Those things are hot. Except for you guys in like Daytona Ormond Beach. We won't talk about you today, though. Here we go. Here we go. Look at all this, folks. Crazy, crazy. All right, so let's switch over to price reductions. Let's find you guys some deals. All right, folks, I'm going to jump north because I expect that as we rotate our way in reverse, we are going to see price reductions in kind where we saw the inventory. Obviously, that is not the case. You had high inventory up here. They're only 22%. Interesting. These folks are going to learn the hard way. So up there, you guys in the Northeast, you better start cutting your prices if your houses are sitting for a really, really long time. Some of these folks in the middle and into the West are already doing it. You got 32%, 1 out of 3. These are big numbers, folks. Coming up here, we got 30% in 32046. All right, back to the heart of downtown. You've got 32202, 44% price reduction coming right out of town. You've got 49%. Folks, 32205. Go make some offers. 1 and 2 homes there have price reductions. Go into the south, 27%, 28%. All these areas you're starting to see. Here's Fruit Cove in Switzerland, folks. 20% price reductions. You guys got to get with it. Some of these areas are slow to reduce. You can see these red ones, 32065, 33%. Middleburg, 30%. We're now south below Jacksonville. I'm going to cruise back to St. Augustine. We'll see how you folks are doing over here. Look at St. Augustine at 380% inventory growth, but it's 19%. Folks, you're going to see this thing light up. Unless these folks are draining the pool and there's buyers getting back in the market and dropping that months of supply, St. Augustine, I think you guys got to have some price reductions coming up in order to clear that inventory because it's going to stack up. And either you want to sell or you don't. That's all there is to it. If you don't reduce. Jacksonville Beach, folks, look at that. Go get yourself a deal. 31%. 1 and 3. 1 and 3 in the Jacksonville Beach zip code. They are slashing and burning. Folks, overall, like I told you, you are seeing price corrections. And a lot of these areas, look at this, folks, except for this area across the north, this little wedge across the east, southeast, and this tiny little section, all the rest of this that you see that's clear or red is price reductions are heavy and inventory is going up, okay? So go shopping. All right, folks, the city beautiful. We are in Orlando. Let's look at the Redfin data first. Look at this. Year after year, you have a big summer spike. School goes out, gets busy, tails off at the end of the year. We started the year really just tracking way down, 22% over year. Pending sales are down. Look at this, down, flat, trending, maybe even falling a little bit. How are home sellers in Orlando putting their house on the market? They are super positive. I am sure I can do better than last year. I got this. Let's go 4%. Home sellers are dream pricing. Look at this. Here's reality, folks. You are seeing Orlando. Look at that. Boom. So it was price flat. Really, this is a sideways slide, folks. When you look at the entire year, it's just like in the same space, and then it's starting to tip. So we're going to see what happens because I have a feeling we're going to be doing reports through the summer that Orlando is down 3 to 5% year over year. You heard it here, folks. It's my own home turf. Realtors don't say this about, no, inventory goes up forever. There's no houses for sale. It's never going to drop. Look at this, folks. Months of supply. We peaked Back earlier this year, we're a little bit over 5 months supply. Everybody was just skyrocketing, and then bam, interest rates come down. This is why the exuberance of sellers. Sellers get the vibe that they're the only person in the marketplace. Just not the case. Just not the case at all. All right, folks, we are now hovering the Orlando marketplace, folks. And I want to find you some opportunities to make some things happen. Now, we're going to look at this like the weather report, because I think it's really, really easy. If you just stare at this map, you say, Jared, I see some blue. Well, if you look at the blue, that's areas with really low inventory. That's areas that have not made major adjustments in inventory. If you look at the red and the clear, that's where prices are coming down. So don't look at those clear areas like, oh, I don't think anybody lives there. No. Those are populous areas, folks, that have a lot coming out of it. Now, I should tell you, this right here is the bottom of the metro area in Orlando. This lap around the outside is what we're looking at. But as you can see right here, okay, so folks, listen to this. Disney World is right where my mouse is, okay? Kissimmee and St. Cloud in the south. You guys see all this clear sky right here in red? That is big inventory. Now you're going west. You got Windermere, Winter Garden. You got Claremont. You got Groveland. All these areas. You got inventory starting to stack up. You got the heart of Orlando. A lot of these areas right here are high crime. Okay, I know that is very controversial to say, but you can go look at a crime map for yourself. Now, there's a lot of crime here. There's a lot of crime here, and as a result, it controls how high prices go, right? Because that shows the appeal of the marketplace. But you can still see that those areas with the lower prices are still holding. And then you have downtown Orlando, you have Winter Park, you have Winter Springs, you have Castleberry, you have Oviedo, you have Waterford Lakes, UCF is up here for the college. All this area is super tight. You got some old areas here. That is Azalea Park. You've got, just a lot of different areas down here. This is Lake Nona, which amazingly, folks, I cannot believe Lake Nona is one of the most popular places on the planet, and there is starting to see inventory pile up. St. Cloud is starting to see inventory pile up. Now we're going to go, and I'm going to cruise in. Now I'm going to go and just look at this corner by corner, because if I don't do this efficiently, there's so much to see that you will miss it. Okay, so allow me to let the graph catch up here, and we're going to cruise around. Okay, so right here we got Sanford. Sanford is one of the best buying opportunities in the Northeast. Okay, you got 138% price growth. Just outside of Tampa, you got 137%. This is kind of, I think, rural out here. But you got Oviedo is at 57%. It can be hard for you to find a deal in Oviedo, folks. You come down below Oviedo, still a good area, still popular. These areas, 8217, 32825, these have been affordable areas. They're going up 130, 140, 150%. Waterford Lakes area, all this, Alafaya, 3282. These areas are popping hot, good areas, and they're starting to see inventory pile up. So you get in your car and you say, I'm going to go shop these areas. I'm going to find me a good seller. That's how you do it. So people always ask me, hey, Jared, do you buy a house in these particular times? Yeah, you buy a house in these particular times. But do you want to pay higher? Do you want to pay low? Do you want to buy something that needs a little work? You want to pay top of the market and get something that's like squeaky clean? It's going to be top of whatever today's market is. Better deal than last year, but probably more. Look at this, folks. These are the areas ripe. Okay, these are popular areas too. 32832, 193%. That's going to be Lake Nona. 34771, St. Cloud. Look at that. 488%, folks. Went from 36 homes on the market last year to 212. The brakes got hit. This is a cool area, by the way. I'm very pro this area. I would not tell you not to buy in that area. Buy it right, okay? 274%. Again, St. Cloud. St. Cloud's going through some adjustments, folks. On the lake, St. Cloud holding tight. Kissimmee up. Point Siena way up. 419% Point Siena. Folks, go buy in Point Siena and make some offers. Hammer them. Got to make some offers. Kissimmee, 34747. This is a very popular short-term rental market where you can buy homes, lease them out, very short for people at Disney. Look at that. 187 homes last year. It's at 580 homes. There's reasons for that. Second home vacation home financing got really messed up. All the way around the west edge, this is all high numbers, folks. But if you kind of go down the middle of town, Castleberry, super tight. I got a flip going on there. I'm kind of glad it's going tight. Longwood, got a flip going here. Super tight. 50% is not a big jump. You went from 28 homes last year to 42. There's no inventory there right now. Now, by the way, Longwood, some of these markets that you see that are blue now, they weren't blue a few months ago. They actually shot up in inventory, but the sellers go, hey, you know what? We're going to get real. We're going to reduce our prices and get the heck out of Dodge. And that's all there is to it. Let's look at price reduction. Let's see where people are actually getting real to move their inventory. We're going to start back at Sanford again. Nothing happening there, folks. Down the edge of town, 25%. Middle of town, you got Winter Park area, 25%. This is, you got Altamont Springs, north side of Orlando. These are not terribly big numbers, but you got some 27%, stuff like that. Points in the areas I told you about earlier. This area, 32832, is only 14%. That's because it's Lake Nona, folks. These people, some of these people, they have major inventory competition now, and their agents are like, can you please reduce the price? I think we should reduce. And the sellers are stuck in last year, and inventory is going up, and the ones that reduce get out, and the ones that don't. And 32832 might still be tight enough to where it's fine. But look at this. There is no reason, folks. There is no reason that there's 455 homes on the market and only 78 have price reductions in 34771. If you're in 34771, get your house reduced and get out of the market. Okay? I'm just telling you. You're sitting, and if anything, the market's going to go away from you. If interest rates go up, you better get those prices right. Coming around the west side, folks, we're just above Disney World. This is almost 1 in 4. This is the Golden Oaks area, Orlando area, Dr. Phillips, South, Windermere, where all the basketball players live. 22%, folks. Winter Garden, 14%. People in Winter Garden aren't cutting their prices. Inventory's getting up, and a lot of inventory's languishing. You're shopping in Winter Garden, you're going to have to push on some sellers, folks. I can help you do it. All right, north side. This is kind of rural, but you got some deals to be had. A lot of reductions going across north side of Orlando, and that wraps up the Orlando marketplace. All right, folks, we're on to the last one. Miami, the powerhouse of the Florida marketplace. This, by and large, has been the strongest player. While Zillow and all the other places in the past couple of years trumped how big Tampa was going to be and built them up to popularity, Miami has really become the powerhouse, the popular structure. But look at this, folks. New listings in Miami falling off a cliff. It is a bizarre market. If you look at it year over year, it goes straight vertical, and then it holds a spring number, and it kind of just drifts over time towards the end. But it looks like that little drift, it didn't get up off the ground very high, and it's already died. But let's look further. Pendings are also down. So you have a lackluster process going in Miami right now, folks. It's been hot. It's been high. It's been setting new records. And we've been looking at Miami going, when is this ride going to be over? But you know what? Tight supply. Sellers feel like they've got the strong hand, and they're still pricing 4% over prior year. Folks, look at median sale price. I cannot believe it. Look at it. They can't sell. Their house sales are way down. They don't have any inventory, and they're up 9% with no sign of crossing over last year. It is crazy to me, folks. If you're looking at Miami and hoping for that deal to take place, this is what I said earlier when we had that overpriced metro marketplace thing. It's like, look at what has happened in Miami, and it's still no end in sight. It's crazy. All right, folks, this is the glimmer of light I want to talk to you about, because this is interesting. This is a leading indicator, folks. This is months of supply. This is a readout of how aggressive buyers are being. You can't rely. Listen, folks, in this weird market, when you have no inventory hitting the market, you could have very low inventory hitting the market, and most realtors will say, well, there's no homes hitting the market, so prices are going to be fine. You can't have falling prices if there's no homes for sale, because it's always going to be aggressive. No. Not true. As I mentioned earlier, you can trickle the supply in. If you trickle a hose into a swimming pool, that pool will fill up if there's no drain out, if there's no absorption, if there's no demand, if there's no buyers coming and pulling it out. Here is the message, folks. Look at this. This is the only market. Miami, I think, is just a few months behind all the others, according to this. Because you now have 1, 2, 3, almost a month worth of upward trend of buyers going up. Hold the phone. I don't care if there's fewer homes for sale. Pendings are dropping. And as a result, even with no new supply, the month of supply is growing, okay? Your actual sitting supply is growing, and when that happens, sellers do not keep the upper hand. They don't maintain it. And even though we're, there's a lag period, which is unfortunate for buyers, a lag between when sellers fully understand their situation, okay? And if honestly, folks, if this is trending up like it is, it's already at multi-year high. The only time it was higher was when you had the pandemic reopen, and everybody and their brother was a remote worker, moved to Miami and bought a house there. And look, you actually had inventory after that, just absolutely plummet, right? This again was when the city was completely locked down. It spiked up, but look what happened after. It just drained, okay? And it stayed low. But this is interesting, folks. This means that buyer after buyer is disappearing in the Miami market. And this is an interesting trend that we've not seen in a very, very long time in this marketplace. All right, folks, I like to do this long standoff view because the Miami metro area, and by the way, the data that I'm looking through, thanks to Reventure Consulting, I love your viewer. This is data from Realtor.com. This is all the listings that you're seeing aggregated through a viewer, put on a map so we can all dive through the data. But look at this. I'm going to do this pullback look because this is a humongous metro area. We got West Palm Beach to the north, all the way down the Miami metro. Look at this. For sale inventory, now remember, the blue is tight and the red and the clear is inventories piling up. This is where the shift is taking place, okay, folks? So if you look back, if you pull back right now where we're looking at, you can see down here the south end of Miami. I'm going to try to put my cursor over this because it throws up a screen. But like the south end of Miami all the way through the heart here, super tight. Inventory still not hitting, even through the heart of this central area right here, going up towards Fort Lauderdale. Now the east side, the outside edge here, and the inside edge looks like on the coastline, right in here where I'm going to put my mouse, all that and a lot of everything over Fort Lauderdale looks like it's slowing down big time. So a lot of the transition you are seeing in the data is happening in large part to these in the entire north part of Fort Lauderdale and West Palm Beach and all this. So in a pulled back view, the real transition of the market is starting to happen in the north, okay? Now, by the way, I didn't flip there yet, and I'm going to eventually, but if I flip to the price reduction volume, see where people are cutting price, you're going to see a lot of the same thing. But let's take a closer look into Miami. Okay, we have West Miami here, we have Miami Beach. Just to give your bearings, I'm at a closer dropped in view. I'm going to drop down to the south here. What we're looking at here is the volume of increase in inventory. And again, starting in the very south, we're outskirts of town. This is only 73 listings currently. But you have Florida City, and just beneath it is up 126. These, anything in red, anything in clear, even if it says 62%, folks, or 75%, even though that might sound low, right? You're like, Jared, you are showing 3 and 500. Folks, when you see a market that's been red hot for so long, Homestead, Florida now, this is not good, okay? When they start to shift to 78%, you probably see price reduction growth even right here. That's all it takes, okay? Some of these areas don't need 400% to all of a sudden feel a shock and to feel a transition happening, okay? So as we're cruising north, lakes by the sea, Purin, and again, forgive me, I don't know this area super well. I stay out of Miami as much as I can. So forgive me if you've been holding on for the Miami update here and you're like, Jared can't read my city. I'm sorry, I'll read the zip code. But the important part is look at all this data, okay? So down south, okay, Kendall and below, you guys are shifting fast. You got 188% right here in 33158. And again, Pinecrest jumping up, 33173, 143. Then Kendall Lakes, some of these other areas throughout the middle, right below West Miami. These are still pretty tight. Brownsville, still pretty tight. Hialeah, still pretty tight. You got this outside edge over here where you're starting to see some inventory growth, okay? Went from 33178, going to be some buying going on. 33029, 186%. Again, not a huge area, but it's almost 100 listings. You've got this area right up here, 33327. You got Weston, which is a a decent size area. All these areas are starting to see transition. We're getting again, Pembroke Pines, look at it, super tight by and large, but I don't know, you see 33024, 78%, Hollywood, 77%, 81%. This is transitioning, folks. You're starting to see a little bit more inventory, and this is why months of supply is starting to cruise up. This is why you're seeing a little bit more of these areas that were, they were all blue. Like nothing had growth in inventory on some of these last updates. Now look, we're just north now of Fort Lauderdale. This is where it really starts to shift. Pompano Beach, 150% inventory growth, 158% all the way through down to the coastline. Again, folks, we're seeing beachside areas that are shifting. None of this was here, folks, 30 days ago. None of this was here. Miami is changing before our eyes. And it's crazy because we're going into the peak season. This is the most productive season for this area, and inventory is starting to pile up. Okay? 33472, 33473, 33437, all these. It's basically the same number of combination for zip code done in the same area, just scrambled up. But look at all this, 326%, 307. These are big numbers, folks. This area had 46 home on the market. It's got over 200 listings for sale right now. Lake Clark Shores, all these areas they're pushing 60%, folks. Even the areas registering blue, they're not low numbers. They're just low numbers by comparison. Remember, the graph is adjusting on the area we're in. So one area, if all the other areas around it were around 90%, and this one's lower, it's going to show it blue. So because, but 80% is a big shift. 40%, again, anything under 50%, probably not a major shift. But 80, 90% and on above that, markets can start to feel different. Okay? West Palm Beach, 233%. Big numbers, folks. Inventory stacking up in West Palm Beach. 220%. None of these numbers were here. This is changing. This is changing. Very, very interesting, folks. All right, folks, I know this view looks very similar to what you just saw, but this is the price cut by percentage share. So everything you see in blue, nobody is price reducing. As an example, I'm somewhere in Hialeah, I think, and I'm looking at an inventory of 63 homes with only 4 of them having a price cut. So 33054, only 6% of the people here are reducing their price. Nobody's reducing their price in that marketplace. But if you come up here, look at this. You've got 33446 with 1 out of 3 homes have cut the price. Inventory's piling up, and this is above Boca Raton. 555 listings here, and 174 of them have cut the price by contrast. 1 out of 3. Big, big, big numbers. All right, so interesting, folks. Look at this. You remember a second ago we were at Homestead, and inventory is coming up, and no one around the Homestead market's reducing. Look at that. 115 homes. All the sellers all look at each other like, nope, we're holding. We're in the right area. 3% price cut. Ridiculous. Just above them, you got a 15%. Now look at what marks red. A 15% price reduction volume, which is not crazy high. When you start to see 20% and above, that's 1 out of 5 home sellers in the market are having to reduce prices in order to sell. You can look at this and scan this with your eyes, and you don't really see 20%, folks. You don't. I don't see any 20%. I see some 17%. I see a 28% right here, but there's only 7 listings in that area because there's a stinking airport down the middle, and no one probably wants to live near it. So here we go. But you got all this stuff up here. Hollywood's 21%. 48 out of 224 houses have reduced. On the outside of Pembroke, you've got all these areas hitting 20% now. Miramar, 14%. Very, very small numbers, folks. Very small numbers. Now, we saw some of these areas starting to creep up. But you can see, by and large, look at the biggest numbers are 1 and 4. Okay? Pompano. Look at this. We saw Pompano Beach. Look at them. 1 and 4 across the board. 1 and 4, 1 and 4. You're starting to see these people. Oh, by the way, I missed down here. 33325. Go make some offers, folks. Not a lot of homes. They're about 100 houses, a decent size. I don't know if that's any place you want to live, but that is almost 1 in 3 homes there. not far from Fort Lauderdale. Here we go. Boca Raton, folks. Look at this. Right in the heart. 33486. Boca Raton. 30% price reductions. 38% price reductions. Almost 30%. Highland Beach. Highland Beach, by the way, was the first East Coast market, them and Ormond Beach, that I was like, wow, it's already shifting. I don't know what's there. I don't know if it's not appealing beach, but it is one that we saw shifting earlier. Look at this, folks. A ton above Boca. Boynton Beach. Look at all this. Price reductions, big time. 1 and 3, 1 and 3, 1 and 3. 30%, 31%. Some of these holdouts at 20%. A lot of big numbers going north. West Palm Beach, we saw some big inventory changes there. Look at this, 22%. These folks are not on the bandwagon yet, but I assure you folks, this 400 listings you got here in West Palm Beach, you folks are going to start to see those cuts happening. Maybe you just need to go in and make low offers, and maybe they'll come off the ledge. But ultimately, there's not enough price reductions going there for that much inventory is being slammed on the market. And all this is bright red. North Palm Beach, you got, move it over, 1 out of 3, 1 out of 5, 1 out of 3, 3 out of 10. All these on the north side. Just Jupiter, 33%. Holy cow. 33477. And again, 218 homes there. 1 out of 3 have hit the price reduction button, folks. But that's it for now, folks. Thanks so much for watching. Do me a favor, drop a comment below. Just say hello. Tell me the video was great. Tell me you hated it, whatever. Tell me how your market's doing. Even if you're in a different part of the country and just watching from there, please drop a comment. As always, smash that like button. For everything Florida real estate, make sure you subscribe to the channel and follow us on this journey. We'll talk to you real soon.